SpaceX, now one of the 5 most valuable companies on planet Earth, and Elon Musk, of course, is a trillionaire. His company's racing toward a valuation of $3 trillion. Crazy times. Doug Flynn is here, founding partner at Flynn Zito Capital Management. Not a bad debut, right? What do you make of this?
Yeah, actually, if SpaceX closes below $200 a share, it'll dip just slightly back under Amazon again. But it actually got all the way up above Microsoft for a hot minute, and now it's settled down a little bit on some profit taking. But there's no mistaking it coming out above what it expected and the run it's been on. There is a little bit of profit taking today for some people who've made some money. But the most amazing thing to me is that this stock, everyone thinks, hey, it's the 5th or 6th largest company in the world, and therefore the US as well. It's not even in any index yet. So your S&P 500 index fund,
right,
even though it's going to get in the NASDAQ 100 in a couple of weeks, it won't be in your S&P 500 index fund for a year based on their rules. So, it's going to live its own life outside of that and do what it does without any regard to your index fund.
Right, but that will prompt more forced buying, essentially, when it joins those indexes, whether it be the NASDAQ or the S&P for index funds. It also had this huge acquisition and announced this AI coding agent Cursor, $60 billion. Now, on valuations, I got a clip from a guy named Doug Clinton, not Doug Flynn, Intelligent Alpha. Going back, and we talk about this with tech stocks all the time, and it does make a reference to the old days. Take a listen to this and tell me what you think. Here it is.
If you look back at the dot-com era, when we had the IPO window open, it was really for any company. Any company that had .com in it could go public and it would have this huge pop. I think this time is a little bit different. SpaceX obviously is a very high-quality company. I think those kinds of companies that have billions in revenue can go public now, and we'll start to see them go public later this year.
All right, how about it? This time is different.
Yeah, famous last words. But I look at it slightly differently. 30 years ago, there were over 8,000 companies that traded on the stock exchanges. Now it's only 4,000. And what's happened is a lot of these companies that would have gone public much earlier are now staying private, and that's where all that private equity money goes. And so a lot of these gains now are happening in the private side of things before the general public gets a chance to participate. And so a lot of those gains are happening much earlier rather than going public later. And so you will see more companies come out. It's that this kind of thing breeds more of that. But you have to wonder how much of all those gains that in the old days would have been participated by all are now going to be transferred to only those people who got in on the private side before they went public. And they'll still do okay, but not, some of those huge gains, SpaceX as an example, a lot of that money's been made by the people that got the inside. So how much you're going to make after it's already out, I don't know. So it is slightly different on a number of fronts. So that would be the way that I would look at it.
Don't even get me started. I should have put that on my whole wealth gap thing. We were talking about the 500 richest people getting even richer, and they're probably some of the people that could be on a list like that. By the way, we talk about tech all the time for obvious reasons. Usually we're talking about the NASDAQ. The old Dow, the Dow Jones Industrial Average, is the story today, hitting a record, topping 52,000.
Absolutely. I'm getting my Dow 60,000 hat ready, just to let you know.
Yeah.
But there's a little bit of a fundamental shift slightly coming out of tech. Think about this. Unless you had fresh cash to invest in SpaceX, a lot of the people that are buying SpaceX are selling other things. And what did they own? They owned other tech stocks, so they're selling that. It's not new money coming into the market. It's just shifting over. But there's also been a shift into other things that are centered around perhaps lower oil prices, lower gas prices, less inflation. And so that lends itself more to the stocks that are in the Dow. And so you're seeing that move up while there's a little bit of a sell-off on the tech side today.
Is it some sort of a move that finally might be happening from kind of growth to value, as people call it in the market, or not really?
I don't think there's a big fundamental shift from growth to value, but what I like to do is to have both sides of that. And so a lot of people will go down the middle and just buy the overall market. But if you actually broke it down into the growth and the value side and then rebalanced it between the two, you actually do even better, because there are times when value will outperform, even though it hasn't for a long time. There's some spot times where it does. So you want to have some of those stocks. You don't want to be all tech all the time, even though that's the flavor of the day right now, especially with SpaceX and what's to come with AI.
Thank you, Doug.